Today's topic is when you are anxious, like yesterday, gold dropped about more than 5%, silver plunged more than 15%. So when that makes me nervous or anxious, at that time we need to think about how to invest like Buffett. So here I captured the article from Fidelity. It's the seven best um, performing Warren Buffett stocks to buy in 2020. So as you know, the Amazon RH, Apple, Moody's, Kroll, Teva Pharmaceutical Industry, and Davita. So you can think about those seven stocks, or you can think about how he making those portfolio. So we're gonna step one more further. So in the U.S. stock market, basically three kind of investors. Like the first one, a retail investor, like me or like you. Um, recently I say like a Main Street investor, and then commercial investors and hedge fund. Usually we call them Wall Street. So those commercial investors and hedge fund, they need to release or exposure their portfolio, follow the rule. So that we called Form 13F. So as I said, the rule in SEC, the Form 13, they should expose in case they're more than the at least say $100 million in asset under management. So we can in this form through the Form 13F, we can see what the smart money is doing in the market. But we a little bit have a problem in here. So it's like this. Um, they release the information 45 days after end of each quarter. That means when they announced the 13F forms, which means that was 14 years ago history. So, and the other one is the 45 days ago, they have that kind of portfolio, which means we're not sure nowadays what kind of the portfolio they have now. And then in the case they the looks like they had a good party 45 days ago, and then we follow their portfolio, which means we are too late have joined their party, right? But still, most of the hedge fund or commercial investors, they in most cases they have a long-term investor. Then their portfolio doesn't changing often. In the case we can we can using their the Form 13F. So to know the 13F files, you can go to the whalewisdom.com here, and then in the website you put the one of a fund or stock name here, and then search is 13F filers. So in the case Warren Buffett, we put Berkshire Hathaway here, and then click search. Then you can see it in recent quarter what they buy, what they sell, and then what they holdings. So that's the way we can see the Warren Buffett's portfolio. So now we know the stock market gurus, what they do in their portfolio, right? But it's 45, even though 45 days later. But anyway, so from that information we can have some idea, like here. So the website wellwisdom.com, see, um, they are using the 13F. They're using the 13F heat map, which means they see collecting the large of hedge fund the 13F, and they can making the collection of the 13F. So in the last quarter, the first quarter, the number one is JD.com, number two is T-Doc, Kindway. So it's all through 24th April. So when you think about the top 20 or top 30, you can make it an index. In this company, the wellwisdom.com, they make it their own index, like a Whale Index 100. So let's see here, see Whale Index. This is Whale Index 100, and then compare to the S&P 500. See that the below down dark side is the S&P 500 from 2006 to the 2020, and it's almost now it's double the return in Wedge Index. So when you're making the top list from the 13F heat map, then you have the same chance to have like a double return than S&P 500. And the other one is in the index you can see each sector, like the 49% here is IT and 20% is communication, like this. So you can making your portfolio, you can make portions in your portfolio how much percent, depending on each sectors. And the other idea you can have from here, like here sector spdr.com, you can find it the ETF related to each sectors. So it's here is the portions, and then you can find the IT sector ETF. You can put 49% in your portfolio instead of only one stock. So that's another idea to making good portfolio. I mean your own portfolio, and then you can expect like a double return here, right? So let's see what I think. So the market is up and down, but in the long term, we can win or we can beat the market. So to do that, we need wearing the glasses from like Warren Buffett's glasses kind of way, and then we can making our own index like a whale index. So in my case, it's a whale index here, right? And then think about the dojos, even though see it going down a lot, it come back again and then making the high return, right? So think about your index like that, and then you can have peaceful sleep. Love once more. Thank you twice.